This is your market recap for May 22nd, 2025. Today we played, well, as you can see, we were very small day. We had a big range, but a very small volume as a whole. So if we go down to the hourly, you can kind of see why. We opened here, did a whole lot of nothing. We were kind of in this 100-point range for the entirety of Asian session and London session. And then 7 o'clock news hits, or pre-market opens, I believe. I don't exactly know when the news was today, but I know it was there was an early news. And then there was, I think it was 7, I don't know. But there was early news, and then there was 9:45 and 10 o'clock news. So I believe this bearish move here was the effect of pre-market opening and some of that news. And then we work our way back up. Market opens, rally, and then kind of horizontal the whole day. Sweep of this liquidity, last hour of trading takes us all the way down to take out these lows. Now, this is going to be very fast because, as you can see, we did pretty much nothing. So pre-market, 7 o'clock happens, take out buy side. We come down, take out sell side, reverse from there. 8 o'clock, rally up, retrace, 9:30, taps into this 15-minute rally up right there, expands all the way up to equilibrium, come all the way back down into this 15-minute, but more so, I think this is equilibrium of this run. Yeah, roughly equilibrium of this run. And then lunch happens. So if we're playing bearish for the most recent part of AM session, lunch is most likely going to play opposite of that. So we play bullish to take out all these highs here. And then we play bearish once again. I believe we have an SMT of these highs here. Taking out this low, that's an SMT. We then rally again. Taking out this high, we have an SMT of these highs. Last hour of trading takes us all the way down below this low. Now, if we go down to the 5-minute, we can see kind of the same thing, just in more detail. 7 o'clock takes us down. Take out this low, rally. Come back down to equilibrium of this move. We then expand up to equilibrium, retrace all the way down, staying within this 5-minute kind of the whole time. A little bit of a closure outside, but we stay within this 5-minute pretty much all of the day. Like I said, lunch starts, we rally, we were bearish, so we start playing bullish, taking out these highs. 5-minute inverse here, validated with this wick and this wick. Closure down here, we rally up into it, tap there, and play lower. This was a trade that I wanted to catch, but it kind of ran away too fast, so I wasn't able to catch that. We then have this 5-minute here, keeping it in once again. We rally up, using this 1 minute for rally up, kind of consolidating the whole way. Spike up, take out this high over here barely. SMT of these highs, last hour of trading, comes down to take out all this liquidity throughout here, reacting with this 5-minute here for the last 20-minute macro from 350 to 410. Now, if we go to the 1-minute, we can see SMT here causes this retrace to equilibrium of this move, which we saw on both the 15 and the 5-minute. We then get an expansion from there after a whole lot of nothing. The macro helps us kind of get out of that. Come all the way up, macro once again. I was looking to catch this inverse fair value gap. But since there was no SMT up here, I needed confirmation through that, and then a 15-minute or 15-second for value up. We got the confirmation, right? Nice closures here, but the 15-second was too slow. You can see with the amount of wicks that are here, there was no extended price action. I'm pretty sure it was entirely filled on the 15-second chart. There was no arrays that I could have taken in here targeting lows. This was kind of my last ditch effort. It was just 5-minute. And I saw the way price was acting within it and then down here, and I just said, I don't want to be in this. Price did come all the way down to here, getting stuck in all this consolidation here. Rallying up, rejoining this zone here. SMT of these lows, again, we're bearish. Going into lunch, So lunch is most likely going to target the opposite of those. So we're targeting these highs here, or actually this one. So we get this SMT, expand upwards, take out this high, fail to take out this high. SMT of these highs causes this huge decrease right here. Now this one was definitely too fast for you to catch. Then we get another SMT of these lows, an expansion. Well, the candle's gone for some reason, but this is the fair value gap right there. Validated once and twice here, come up, close above it, come back down, tap into the 5 minute, but also almost tap constant encroachment of this 1 minute inverse. And we expand upwards, come back down to this 1 minute fair value gap, working our way upwards, still touching that equilibrium of the daily range. Come all the way up, barely sweep this high over here. You can see we don't even close above it. Oops. Then we get another rally here. ES takes out this high, NQ doesn't. Get an SMT there. We get an expansion lower. We're looking for a raise throughout here. Nothing happens in the 15-second. You can see the wicks here. Leaves no arrays to be had. We then get 3 really quick candles without any retrace. So if we're entering on the lowest barrier to entry, it would be this 15-second there. Our stop would have to allow price to go up to this inverse because it is validated right there. So if we use the fib, we can see 50% is at 319, but I like to give it a little wiggle room, so I have mine all the way up at 321. Then of course we'd be targeting these lows, and these lows, and that would be trade of the day. We see this spike here, tap back into constant encroachment of this 5 minute, and then continue the move all the way down. The past couple of days, AM session hasn't really been tradable in my opinion, but the PM session definitely has, and I think since I have the time, I'll definitely be, at least for now, looking and just tape reading PM session, seeing if there's any SMTs, what arrays that might go the way that I predict or that I see the market going, and go from there. Because I mean, just compare this, right? I mean, there's maybe 1 or 2 good moves here, but this just happens. It's so much faster, it's so much cleaner. I don't have to worry about it breaking out of consolidation. There's nothing here, no SMTs, nothing here, no SMTs. We just have a fair value gap. So much safer in my opinion over here. This is why this is trade of the day, and last hour of trading is most likely the most consistent thing that exists throughout a trading day from in recent times from my experience. So if you look at the future, tomorrow is Friday. Let's look on the weekly range. We're nowhere near this low, so the 20 to 30% of the weekly range is not even achievable. Geez, I don't even know what to look at. Again, my weekly, sorry, I'm flipping through these. My weekly target was down here, reacting off of this. Do I think we're still going to reach this? Absolutely not. We do not have the speed to get down there. We have validation here. It's possible, kind of just, we're within this, right? And this is an inverse because it's validated here. Now, this could be being used as an inverse. We have this here, right? Closed perfectly. I wouldn't be shocked if we rally from here, given how reluctant we are to actually release to the downside. All right, we tried here. Well, we were still going up at this point. We tried here, failed. Tried here, failed. We tried again, and it's not working. So I wouldn't be surprised if this daily inverse here is keeping us in it, and we're going to play bullish out of that. Now, am I certain of this? Absolutely not. I mean, look at the week. I'm not certain about anything. We opened here. Monday rallied, and then everything else has just been within this range here. So, all that to say, I have no clue where price wants to go. Not as of now, at least. We need some sort of move to break out of this range, and then we can go back to trending. So yeah, this has been your market recap for May 22nd, 22nd, May 22nd, 2025.